Hello everybody, Ignatius L. Jackson CPA here with another exciting video for you. Today's topic, read the shirt. Put your kids on the payroll, okay? So today we are talking about how to put your kids on the payroll, how to maybe invest some of the dollars that you're paying them, and how to save a ton of money in taxes while you're doing it. So that's why we're doing this strategy, right? To save some money in taxes. So go ahead and stay tuned. We're gonna be right back in a second, and I'm gonna tell you all about it. All right, everybody, and we're back. So thanks for tuning in to today's video. Again, here is the topic for today. We are talking about putting your kids on the payroll. Just like my shirt here says, just happens to be in my alma mater's colors, Go Devils, Sun Devils that is, Arizona State University. Great school, so if you're ever looking somewhere to put your kids, hey, great school to put them into. Okay, so here's what we're talking about today, paying your kids, right? And the great thing about paying your kids is it's a great way for you to get a tax deduction in your business while at the same time getting your kids some hopefully tax-free income depending on how much you're paying them, and all at the same time allowing them to maybe start to save for either their retirement or for college or whatever the case might be, okay? So why would we want to do this? There's a few reasons, all right? One, it's a great way to teach your kids about working and about money, okay? Personal finance is one of those things that a lot of children are missing in their education system, and so this is a great opportunity to start that conversation and to start that education with them, to teach them a little bit about personal finance, working, what to do with the money once you get it, all that kind of stuff, okay? So that's one area you could do it. Or you can take the approach that some people do and not tell the kids that you're paying them for doing stuff in the business, or not tell them exactly how much you're paying them, and then taking it upon yourself to put some of that money into a Roth IRA or something like that, right? And so there's a couple different directions you could take this, okay? But whatever reason you want to do it, all right, it has to be legitimate. You cannot just pay your kids and take a deduction in your business. They have to be actually doing something in your business. So if you have a business, for example, that the work that you do requires so much education and experience to do, there's no way that you can justify your kids having as high of a salary as you, or doing all the stuff that you do. However, there's some administrative stuff typically every business has to do that your kids could potentially help you out with. So whether that's the bookkeeping, helping out with answering the phones, taking notes, cleaning the office, if you have rental properties, doing some landscaping, or whatever the case might be there, right? So there's ways you can think of stuff that they can legitimately do in the business, okay? We're not trying to skirt the tax law here. We are legitimately taking stuff that we would be paying your kids anyways. So you're gonna pay for the stuff anyways that they purchase, right? Whether this is school classes, extracurricular stuff like sports, soccer, baseball, that kind of stuff, right? So all the things you'd be paying for anyways, and we're making them earn it instead of just giving it to them. That's really all that we're doing here, okay? And so we want them to actually be doing something to make those earnings and to make money in that business, okay? Now, if your business is of a nature where there's nothing you could think of that they could do, and that's where it might make sense for them to go get like a side job, whether that's babysitting or whatever the case might be. Maybe you set yourself up a little sole proprietorship for that work. You have the person that's paying them pay you, and the same strategy would then apply, okay? So you can have like a little secondary business that you have going on where they are doing whatever it needs to take to bring in that revenue, or a landscaping business, another option as well. So there's different ways you can go about implementing this strategy. The question is, how do you want to do it for your specific situation? Okay, and that's where having a consultation with somebody that understands all the rules is probably gonna make sense. But what we're going to do today is we're going to give you some of the basic skills and understanding, the basic knowledge, right, that you would need to understand when you're talking to whatever professional you're talking to about this, so you can have an idea of some of the key components of how you do this and implement this strategy, okay? So let's get into it. All right, first thing you need to do, you have to have a business, obviously, okay? Whether it's babysitting business, landscaping business, accounting firm, law firm, whatever the case is, right? You have to have some sort of business, okay? And you have to have tasks that the child can do for said business, all right? So you got that out of the way. Then you have to figure out, okay, how do you have it structured, all right? So if it's a sole proprietorship or a partnership where it's just you and your wife or your spouse, okay, then you can pay the kid directly from that business, okay? If it's an S corporation or a C corporation structure, then you have to loop in a sole proprietorship in there where the S corporation or C corporation is paying a management fee or a fee for services of some sort over to the sole proprietorship that you set up, okay, to do certain tasks for that S corporation or C corporation, okay? So it's something you can do, all right? You just have to get it set up. And so that S corporation or C corporation will then fund this new sole proprietorship, all right? You don't necessarily have to have a LLC. Sometimes it makes it easier, especially when you're trying to go and open a bank account. So depending on the state that you live in, okay, like Arizona, for example, there's no annual fees for LLCs. So all you pay is the initial fee, which is like $45, $75, something like that. So setting up an LLC is pretty easy here in Arizona. However, if you're in a state where they require like an annual fee or like $800 fee, like California, I think Texas has a similar rule. So if you're in some of those states, right, then you may not want to have LLC. You might just want to go with sole proprietorship, which is basically just a bank account that's in your name, but it's set up as a business account essentially, to where, you know, it's treated like a business, okay? So, and when you talk to the bank, all right, what are we telling the bank that you do? Well, so you hear a lot of people say things like family management company as this sole proprietorship that you're setting up. I wouldn't necessarily tell the bank that's what that is. It just confuses them. What you want to tell them is whatever the main thing is that you're going to be doing. Landscaping, administrative work, babysitting, whatever the case is, okay? So that's what you would tell the bank that you're doing, okay? You're not going to tell them that you're doing some sort of family management company, because they start to think, woo, woo, woo. The alarms start to go off, okay? They start to think you're doing something fishy, okay? So you just basically tell them like what it is, that the purpose of that business, okay? And I recommend having that sole proprietorship account at the same bank that you use for your S corporation or your C corporation that's going to be funding it, and also at the same bank that you're going to have your kid's bank account, which is the third thing that you're going to need, okay? So just to recap, you got business, all right? If it's S Corp or C Corp, you also have a separate sole proprietorship bank account, okay? And now you have to have your kids with a bank account. And if you have multiple kids that are working in the business, each kid needs to have their own bank account, okay? You cannot shortcut this stuff, all right? There's a lot of banks that have free accounts for underage kids. They don't charge you for those. So just kind of choose your bank wisely, knowing that you're going to be implementing the strategy. Make sure that you understand all the fees associated with opening all these different types of accounts, because you want to have everything at the same bank. It's so much easier. You can generally look at it all in one profile. You can just go in there and transfer funds back and forth instead of having to do stuff like writing a check, depositing a check, et cetera, et cetera. I mean, sometimes you might want to do that just to kind of give your kid the experience of receiving a check. I get that. But, you know, to make it somewhat easy, sometimes you want to just also make it simple and just transfer the funds from, you know, the S Corp to the sole proprietorship, from the sole proprietorship to the kid's bank account. That way you have everything working in order, but it's nice and seamless and easy to do. You could literally do everything within a matter of a minute. You could transfer it from the S Corp to the sole proprietorship bank account, from the sole proprietorship bank account to the kids' bank account. You're done, okay? Now, that's the transfer of funds. Obviously, there's more to it than that. You gotta have documentation and everything, right? But that's the nuts and bolts of how you move the money around, all right? Now that we have that out of the way, let's talk about some of the documentation issues that you have to have in place. So when you're documenting this strategy, one, you need to have some sort of timesheet or record of what the kid was doing for your business, okay? You're not going to just pay the kids some random amount. It has to be something reasonable based on the type of work that they are doing for your business, okay? So whatever that is, let's say it's admin work. Right now, the going rate for admin is about $20 an hour. Well, that's what you're paying them. You're gonna pay them $20 an hour, and they're gonna track their time and how much time they're spending doing admin work. Let's say it's 10 hours a week, whatever the case might be. You're paying them $200 a week in that situation if it's 10 hours a week, okay? Now, it's up to you how often you wanna pay. You can pay them every week, every 2 weeks, once a month, etc., okay? So because of your kids, that falls outside of the exceptions to the general payroll rules for most states. You have to just confirm your particular state's rules. But in most states, it falls outside of the general payroll rules, also outside of the child labor rules, all that kind of stuff. So you don't have to do workers' compensation either, none of that stuff. So usually you're gonna be excluded from a lot of that stuff, right? And so what you would do is just basically pay them. As long as you have that paper trail, okay, we did this much work this week, or this month, or whatever the case is, and here's the payment, transfer it over. I would recommend doing it at least once a quarter at the very least. I would not wait till the end of the year and do everything all at once. Technically, you probably could, but you just want it to seem a little more realistic, like a little more like payroll. Really, if you want to overachieve, do it once a month, okay? But at least once a quarter, transfer the funds around. But yeah, once a month, even better, okay? So now we talked about documentation of the time, all right? So what about documentation of the businesses? So obviously with your LLC and S Corp, you need to have documentation for that. The sole proprietorship, just like a basic, little summary of what the business is supposed to be doing, should be fine for a sole proprietorship. You don't necessarily have to have organization document and all that kind of stuff because it's not an LLC. Now, if you do create an LLC, then yes, you're gonna have to do all the standard LLC type stuff. Okay, so that's another downside to creating an LLC versus just using a sole proprietorship bank account, okay? But yeah, there's documentation there that you might have to do on some of the business side of things, okay? Now, the sole proprietorship that is paying the kids directly, okay? That's going to show up on a Schedule C. And then you have your S Corp or C Corp, should probably be an S Corp 9 out of 10 times, is going to have its own separate tax return. Now, in terms of, let's see, what direction I want to go here next. So in terms of how much you're paying them, we already talked about that. So let's talk about the tax implications. Okay, so let's go down to tax implications. All right, now, when you pay them from your S Corp or C Corp, you're receiving a tax deduction, okay? When the sole proprietorship pays them, the sole proprietorship receives a tax deduction, but it has the income from the S Corp, okay? So your S Corp, in theory, you should be paying a 1099 to the sole proprietorship. So you're gonna receive a 1099 in your social security number essentially from the S Corp, okay? That S Corp, or that sole proprietorship, excuse me, then does not issue a 1099 to the kid. It does not even have to issue a W-2 to the kid. You technically could if you wanted to. This is something that's got a lot of, there's a lot of debate over this, but let me just tell you, I've never seen anybody get a penalty for not issuing W-2 to a kid that's under 18 years old, okay? And that's important that I forgot to mention at the very beginning of this video. This what I'm talking about right now, this whole thing that I've talked about so far, are for kids under 18 years old, okay? And so when it comes to kids under 18 years old, there's no taxes as long as they stay below a certain income level, okay? Now, how do you determine what that income level is? It's the standard deduction for your state. Would mean no income taxes at both federal and state level, okay? So if your state matches the federal standard deduction, which roughly about half the states do, then you, as long as you stay underneath the federal deduction, standard deduction rate, then you do not have to worry about paying taxes on what you're paying your kids under 18 years old, as long as they're working for a business that's owned solely by you as their parents, whether it's husband and wife, or husband by himself, or wife by themselves, okay? So that's the whole reason why we're doing this is, you know, one, to give them some education, but two, to save you on taxes, okay? That's why it's worth the headache and the extra work and the effort to kind of move stuff around, is to save you ultimately in taxes. The kids then have no payroll taxes, no income taxes. Again, as long as they stay under that standard deduction rate for that year. For 2023, it's about $13,800, somewhere around there, I believe. Don't quote me on that. I'm going off of memory here, but I think it's around $13,800. So if you're in a state that matches the federal level, then that's your wheelhouse to have no income taxes. Now, if your state has a lower standard deduction, I'm still okay with paying them the full $13,800 or whatever, okay? Because your rate at the state level is fairly small. Between your rate and your kid's rate, the amount that we're talking about is fairly small typically for most states. Obviously, factor in your particular state, but if I have to pay a little bit of taxes at the state level, I'm okay with that. We're not talking about 37% potentially, 36%, whatever, at the federal level. We're talking about usually less than 5%, especially at your kid's income tax rate. Now, your rate, depending on the state, like California, for example, could be like 13% for your rate. So having it go down to the kids is actually a pretty big gap. But most states, I think, you know, you're fairly going to be fairly comparable on the rates. But even so, I mean, if you have to pay a little bit of income taxes, I'm okay with that. You still don't have to pay payroll taxes at the federal level because they're under 18 years old. And there's an exemption for that. Okay? Whew. Okay, now, to take this to the next level, if you really want to really take advantage of this, the key to this strategy is taking the funds that you're paying the kids and maxing out a Roth IRA, assuming they have enough earned income, every year. Max out a Roth IRA every year. That for 2023, that's $6,500 per year. Okay? Max out that Roth IRA. Max it out. That will set them up so huge between saving for college, going to, I don't know, setting up for retirement. I've done a lot of figures and put out a lot of data showing math on the earlier you start saving, the more wealth you're going to have later in life. Okay? And so $6,000 a year or $6,500 a year is going to be a huge setup for their future. Okay? And additionally, whatever the rest of that is, so let's say you pay them $12,000 or $13,000, so the rest of that you can use on their everyday living expenses, or you can even fund a 529 plan or whatever, some sort of trust in their name. There's all kinds of things you could do at that point, okay, to further save for their future or to help pay for some of their expenses. Either way, however you want to handle that. But at the very, very least, my encouragement to you is to max out that Roth IRA every year. If you don't take advantage of that, you're really missing out on the biggest benefit of this strategy. Why is that the biggest benefit of this strategy? Because normally when you put money into a Roth IRA, you're paying taxes on that money. But what did I just tell you earlier? There's no taxes if they're under 18 years old and they're being paid by your business that you own 100%. There's no taxes. So now they basically have tax-free growth with no taxes ever being paid. There's only one other place in the tax code where that's allowed, and that is an HSA, a health savings account. Okay? But this is a phenomenal way to get tax-free money in and tax-free growth and tax-free when it comes out, as long as it comes out when they're 59 and a half or older. Okay? Or upon their death. There's a few different ways they can come out, but that for them to use a person, they have to be 59 and a half or older to avoid any taxes. But I mean, come on. And the great thing about it is too, the contributions that you're making to the Roth IRA, they can always pull those out to use for stuff if they needed to for some reason, some sort of emergency or to help pay for college or whatever the case might be. Okay. So there's ways for them to utilize those funds without any taxes or penalties. Okay. So voila. Hopefully that was eye-opening for some of you. Or if you've already heard about this strategy, hopefully it was a good refresher for you. But huge benefits to paying your kids. Don't just gift the kids money. Don't just put money into a UGMA or a UTMA, whatever. Okay. Think about what you're doing. Make the best financial decision for you and your child that you can by consulting with someone that understands how to do the strategy in your specific circumstances and putting it into place. Okay? So don't do this on your own. Make sure you're consulting with an advisor. I don't care who that is. If you don't have one, then reach out to us. We can happily help you out to help guide you. And yeah, we can go from there. So, all right. Hope everybody enjoyed this one. It's been, like I said, it's been a little while since I've updated this, so it was time overdue. But hopefully this is a good one for you guys. If there's any questions or anything like that, feel free to leave a comment. As always, don't forget to like and subscribe and enjoy the videos. Share the videos with your people in your network, especially your family and friends. That's how we get more information out. That's how we build more millionaires, which is my main objective in life, is to bridge the wealth gap that we have in this country by education, okay? Education is how we're going to bridge the wealth gap in this country. Giving people financial education, converting them from spenders to savers. Sorry about that. I was trying to figure out the right words. So thanks everybody for tuning in. We will be back with more in the near future. Deuces.